This is a roundtable discussion on the evolution of opportunity zones with our partner Capital Square, joined today by Lewis Rogers and Natalie Mason from Capital Square. So we're going to be talking about how opportunity zones have changed over time. Capital Square is one of the earliest adopters of opportunity zones. You've been doing a lot of funding into different opportunity zone projects. In the mostly the Mid-Atlantic region, a lot in Virginia and Richmond specifically, but a few of the other surrounding states as well. But to start us off, maybe just give me an introduction to Capital Square and opportunity zones and what you've done in the opportunity zone world so far to date.
Great. Well, I'm Lewis Rogers, founder and co-CEO of Capital Square, and Natalie Mason is our co-chief development officer. I was a tax lawyer for many years, billing like the guys that preceded us on that panel, and learned a good bit about tax laws. Our company, Capital Square, used that knowledge 12 years ago to create a large platform for tax advantage real estate investments. And the most famous one is the Delaware Statutory Trust for 1031 exchange investing. When the Tax Cuts and Jobs Act barely made it in 2017, we jumped in with both feet and said, this is phenomenal. We can build buildings in neighborhoods that need housing. And we were very excited. And then we realized, we're talking about the evolution. In 2018, we launched our first OZ fund. But what didn't we have in 2018?
Well, you didn't have regs, right?
There you go. So the financial advisors, the CPAs, Natalie got this all the time. Oh, you're a great developer, but we don't have any regulations. We don't know what this rule means. We don't know what that rule means. We don't know how to do this. We don't know anything. So it was sort of a big snooze at first. And then what happened? And then proposed regulations came out, and then final regulations came out, and then more regulations came out. And so people came on board slowly. CPAs are not the quickest to evolve, but they did. The lawyers and tax lawyers came on board. The owners came on board. And a great deal of excitement built up as early as 2019, 18, 19. We were still somewhat in the dark, but the awareness was building. The excitement was building in these neighborhoods like Scott's Addition in Richmond, which is maybe, the Brooklyn of Richmond, which is kind of a contradiction of terms, but it's an industrial neighborhood that has evolved dramatically. In that neighborhood, people were very excited to live, work, and play in their neighborhood. And we were excited to be able to build beautiful new mixed-use buildings for them. Not me, I'm a damn lawyer. Natalie is our developer. She's the builder. She was able to get these buildings built on time, on schedule, on budget. And you remember what was happening about that time? Global pandemic, supply chain, inflations. It was a terrible time to build, but guess what? We got them all built on budget, on time, on schedule. And the awareness grew. And it grew. And then there was kind of one more big hurdle in the way, and that was, how are you going to pay my taxes in 2026? Well, back then it was so many years, people said, 2026 will take care of itself. But in each of these cases, we've been able to buy a lot in a qualified opportunity zone. Natalie's able, with her team, to create a plan to build a building. We raise a fund, one property, one fund, not a blind pool of $2 billion, but one building, the equity for one building, one construction loan, build it, lease it up, permanently finance it, and do a cash out special distribution to the investors to pay their taxes. We've done that time after time after time, and it's worked like magic. And so we've evolved from where nobody knew nothing, to use bad English, to where people are so excited that now they want to know, how did we do on these buildings? Did we accomplish Congress's mission? in creating jobs in a vital economy. And Natalie, did we accomplish our mission?
Yeah, pleased to share with our first 4 OZ developments that we got started on in 2019. We've delivered them, stabilized them, refinanced them, returned money to our investors, and we've been able to do some economic impact reporting to really prove out, wow, these things are actually creating jobs. They're creating housing. They're creating a lot of new tax revenue for municipalities that can go towards other things. So just to brag on Lewis a little bit, you know, some people in the industry call him the godfather or grandfather of DSTs, but he really was a first mover entrepreneur in the OZ space. And I think, you know, a lot of groups that were able to get projects, OZ developments going early, and particularly if they were done in a single asset fund structure, have been able to prove out the concept and deliver, refinance. And we're hopeful and excited that it looks like this program is going to get extended so we can keep doing this. But yeah, Jimmy, interrupt us. But to answer your original question, we've been able to get close to 2,000 multifamily units either delivered or delivering this year, and over 50,000 square feet of retail space. So in addition to the Capital Square larger portfolio that's, you know, over 15,000 units, opportunity zones have become a bigger and bigger share, and we're really pleased to be able to kind of cross that 2,000 unit mark just in really a span of 4 years.
Yeah, that's incredible. The progress that, well, first of all, the progress that the industry has made. I want to speak about that in a moment and kind of respond to some of what Lewis was talking about, but also you guys, Capital Square, your firm has delivered huge amounts of housing and huge amounts of tax savings and investment returns to your investors so far. I think the jury's still out on whether or not opportunity zones as a whole are delivering it as intended, but Capital Square seems to at least be doing things the right way and is delivering for sure. What I see is
the way to prove it. Just one follow up on that.
Go for it.
We'd like to prove it. I know reporting is not in the Tax Cuts and Jobs Act because in reconciliation, it's not a budget item. That's for you wonks, you policy wonks. But we want to report. And so we hired FTI Consulting, one of the biggest consulting firms in the world, to run the statistics, to be able to prove to the Tim Scotts of the world, who are already big believers, that we're actually creating jobs. We're creating economic impact, taxes for government, for local governments, for schools, and for all their wonderful needs. And so I think it's important as we evolve to report, even if it's voluntary, and best to have third-party reporting so you can rely on it.
Absolutely. And by the way, Lewis, I just posted a link to that Capital Square report from FTI in the chat section of this Zoom call. So if any of our audience wants to check that out, I would highly encourage you to click through to that. That's one of the biggest criticisms of opportunity zones from its detractors, is that there's no transparency into how this is working, where the dollars are going, how many jobs are being created. So individual sponsors are taking it upon themselves in some cases, not in all cases, to offer some reporting. But this Capital Square report, I was talking with you guys last week. I said, this is great. I haven't seen anything quite like this from any other sponsor just yet. So please do click through to that. I think it'll be really interesting if you're an investor. And if you're a developer or a sponsor and you're looking for what a report should look like, I think this offers a great model. So really appreciate you guys going to the effort to producing that, because I think it gives a lot of comfort to investors and to policymakers about how this program is working. You know, Lewis, I saw in 2018 just a huge rush of excitement to the opportunity zones industry because it was brand new. It's this incredible tax incentive, unlike any that we've ever seen before. Somewhat similar to DSTs and 1031s, but I feel like it could
So
be
much
even bigger than that, right?
bigger.
So much bigger.
Any capital gain versus a real estate gain, I mean, we're talking about probably the most exciting provision in the tax code in my lifetime.
I agree with that. And I think what we saw in the ensuing years is we saw the wheat separate from the chaff. We saw regs come out, the market matured a lot, maybe there's a little bit less interest and less excitement because I think some people figured out, okay, this isn't quite for me, or, oh, this doesn't work for cannabis, let's say, or, one reason or another. I've seen some of the less reputable sponsors and less savvy investors kind of fall by the wayside. But now we've got like a very established core group within this industry, and it's very high quality. And Capital Square definitely one of those sponsors at the top of the list in terms of sophistication and quality. And unfortunately, COVID and then the resulting tax rate hikes and just some market uncertainty has led to a little bit of a drawback. But I do have high hopes for the future of OZs, especially if we can get the program renewed. We're going to move on to our panel in about 15 more minutes here, which will talk all about that legislation. But let's turn back to Natalie and Lewis now at Capital Square. Some additional points I think we want to cover. I want to talk about the housing crisis in this country because there's a huge housing shortage. You mentioned briefly a moment ago that Capital Square has already delivered or is about to deliver about 2,000 housing units just through your Opportunity Zone platform. Can you speak to that a little bit more?
Sure.
Educate us.
Yeah, sure. So, there's the statistics I've seen a few times, and I think it's from March of 24, so it's now dated, but Economic Innovation Group put out a report that Opportunity Zones, which account for about 10% of the country's population, was at the time, this is now a year ago, accounting for 20% of all new market rate multifamily units being developed in the country. And that was up from just 8%. So from 8% to 20% prior to the legislation passing. So, if there's any sort of, the most powerful policy commentary, I think, on Opportunity Zones is that it has really helped tackle the country's housing shortage crisis. And, when we look at some of the Opportunity neighborhoods where we've been developing over the last 2 years, there are a lot of developers, a lot of proposed multifamily projects in those neighborhoods got put on the shelf. They got delayed or scrapped. And it's for all the reasons that we all know about: rising interest rates, institutional equity receded from multifamily development, and it's really tremendous that this Opportunity Zones have created a source of equity, a source of funding to keep developing housing, and not just developing housing, but developing it in neighborhoods that don't traditionally get much investment anyway. So we couldn't be more proud of the fact that we're delivering these units in these neighborhoods. We have a couple developments that do actually have workforce housing components in them, so it's not all market rate housing. We have a development in Raleigh, North Carolina, right at the edge of downtown, that's delivering over the next couple months. It is right on the edge of an Opportunity Zone, across from the convention center, south of downtown. Our development is bringing over close to 300 multifamily units and over 10,000 square feet of retail to this intersection. Well, guess what? Across the street is an 11-acre Raleigh Housing Authority site, which is slated for redevelopment. They're going to try to bring mixed income, mixed use development to what is a decades old, low density, affordable housing, public housing project in Raleigh. And how great that we we are delivering an Opportunity Zone development at this intersection that's going to catalyze more development in these neighborhoods. So we're sort of seeing this program play out in a very real way, and bringing housing across a variety of incomes, across the income spectrum, which is making a real impact.
And you're working on your 9th Opportunity Zone project right now. I'm sure you'd like to do 9 more or maybe 90 more, right, over the next several years or even decades to come. So let's talk about the future of Opportunity Zones. And just for the sake of my audience, we're going to talk about this in great detail on our next panel starting in about 10 more minutes, but want to hear from the folks at Capital Square first. Will the OZ program be extended and made permanent? Because currently, for those who are unaware, it is scheduled to sunset at the end of 2026, and only an act of Congress would be able to renew it. So what are your thoughts on the future of OZs? Will we get an extension beyond 2026? And what are you hoping for?
hoping for, and we believe we're going to have a permanent statute. And basically take the Tax Cuts and Jobs Act and make it permanent in one big, beautiful bill that will sail through the House because they have the discipline. Now they need to work with the Senate to make it happen in budget reconciliation. I think in the ozone space, we're going to have a happy day. Some of the other provisions may not be, bonus depreciation may not be 100%. There may be some give and some take that we're not going to like as much. But the Opportunity Zone legislation has been such an unqualified success on the ground in the neighborhoods. We're talking about what Novogradac reported. You told us it reported 40 billion, but it's really 150 billion. Now, if it's 150 billion of equity with 50% leverage, that's 300 billion. And if the average building is 20 or 30 million, you can see there's hundreds of neighborhoods that have been improved. And that's so powerful that I believe we will get our ozone permanence, but we may have to give up a few other things in the tax law that we'd like to have.
And Jimmy, just to share what I think everyone can expect to see from Capital Square, certainly if we get the extension, I think you can expect to see us come out with a very robust continuation of our Opportunity Zone strategy. I think there's just going to be new opportunities. So if you think about what I call our first and second generation Opportunity Zone developments, OZ neighborhoods, right, are essentially based on 2010 census data. And, part of our strategy was to go really to more urban locations, really on the periphery of downtown, where we could go into neighborhoods that were already seeing the spark of transformation. And if you look at where we have our current OZ offering in Scott's Addition in Richmond, Virginia, where we're on King Street in Charleston. As I mentioned, we're downtown Raleigh. We are very much have been in neighborhoods that, if you start looking at 2020 census data or sort of new metrics, these are now neighborhoods that are performing better when you look at incomes and poverty rates and things like that. I think once OZ extension does happen, I think it gives Capital Square a great opportunity to think sort of outside the box, so to speak, with where other opportunities may be. Maybe it's in more workforce housing in rural areas. I think we will adjust to where the opportunities are, but no question we will come out pretty robust.
Good stuff. Well, we got about 3 or 4 more minutes before I move on to our panel discussion. Emily Lavery and Peter Lawrence will be joining me for a panel titled Trump's Opportunity Zone Plans for 2025. We'll talk about this extension and renewal possibility for Opportunity Zones and possible permanence as well. But let's get to a couple of questions from our audience. Natalie, this one's... Go ahead, Lewis. Go ahead.
Dispel. In our 9 Opportunity Zone funds, not one single person's home was displaced. No one was displaced. We're basically in cruddy industrial neighborhoods of brick warehouses that are dysfunctional, but we're not taking people's homes. We haven't, we're not going to.
Yeah, that's good. I mean, that's really powerful. That's one of the biggest criticisms of the program, is that it's displacing current residents. And, my guess is that is happening in some locations. Hopefully that's the exception rather than the norm, but it's incredible that Capital Square hasn't displaced a single local resident just based on your strategy and where you are developing. I think that's incredible. Let's go to a couple of questions here.
One TV shed got destroyed.
Well, there you go. Okay, so here, Natalie, this one's for you. Barbara asks, could you please repeat the source of the study you cited regarding the higher percentage of multifamily units being created in QOZs? I believe you said it was from the Economic Innovation Group, EIG. I don't have the link to that report handy, but...
Yeah, I'll try to find it right now and send it around. And it was March of 2024, and they have a great kind of graph showing this. So I'll try to find it now and send it.
Good. And then let's see, we got a few more questions here. Judith asked, actually, Judith, I'm going to hand your question separately because it's not Capital Square specific. We did have a question here. Does Capital Square raise its capital largely through the retail capital channel.
We do. We do through independent broker dealers and wealth managers across the country.
But you do allow, I think, for some direct investments straight from accredited investors. Is that right?
We call them institutional investors. We have large property owners who are investing substantial sums. Yes.
Very good. Okay. Question here from Brad. Brad asks, Lewis, I'm curious why a DST or Delaware Statutory Trust is a preferred form of entity structure. Are you using DSTs in creating OZ funds or QOZBs, as again, just not seeing the why here? Happy to be convinced. So I don't think that's what you're doing. I think your DST platform is separate from your OZ platform.
Right? He's not seeing the why because they're not connected.
So those are two separate platforms, Brad. I think
one's for 1031 and one's for tax forgiveness in 10 years under the ozone program.
Yeah, correct. Okay, so glad we got that one clarified.
Sorry about the confusion.
No, that's okay. And I do see that Natalie just did link to that EIG report, so please do click through to that. That was for Barbara or anybody else who's interested in checking that out. Oh, actually, Natalie, you only posted that to just me. So let me see if I can get it to everybody.
How do you do this? You're one guy.
And while you're doing that, Jimmy, just a quick plug, since you did share the FTI third-party economic impact report.
Yep.
Since I know people are tuning in from all over the country, you guys have Congress people. Please share this with whomever you can, particularly Congress people. The more that they know that the reporting exists and that it's proving that it's a worthwhile program, the more that people in Congress see that, I think the better it will be over the next coming weeks. So please feel free to share that with your legislators.
Terrific. We have run out of time. Any closing thoughts from you guys, Lewis or Natalie, before we wrap up this segment?
We think the future is bright in the zone, and we appreciate what you're doing to bring light to the topic. You've been on all day in my office. I haven't gotten any work done, so thank you for that. And just keep up the good work. We're going to become a permanent part of the tax code, and we will be building legacies across the country.
Well, looking forward to helping however I can. Lewis Rogers, Natalie Mason from Capital Square, thank you both so much for joining me today. Really appreciate your time.
Thanks, Jimmy. Well done.
Thank you.